What up traders, I am Agbo Samuel Odi, the liquidity king and the AUD sniper trader back on your screen. And in this video we're going to be talking about candlestick formation. Right now, what candlestick formation are? There are certain patterns that candlestick print on the price chart that inform us traders on what price might likely do, either continuing in the same direction that price was or a total reversal at all. Right now, there are a lot of candlesticks pattern. Right, there are thousands of candlestick pattern, but I specifically use just 4 main candlestick, and those are the candlesticks I will be breaking down in this video. And please, if you haven't watched my previous video on how the anatomy and what candlestick is all about, please just go watch that video before watching this, because that will give you the background or the basic knowledge of what candlestick entails. And this is where we're going more advanced in the candlestick formation. Right, so now the candlestick that I preferably use is the engulfing candlesticks. Right now, we have two type of engulfing candlestick. We have the bearish engulfing candlestick, which is this, and we also have the bullish engulfing candlestick. Right now, what does this entail and what is the formation or the psychology behind this candlestick? It states that the previous candle would be bullish, right, for a bearish candle, for a bearish engulfing candle. The previous candlestick will be bullish, right? So the next candle then engulf or embodies the previous candle. Right, so as you can see that this candlestick, this is the open price of this candlestick, and it traded up and closes here. But what do you see? The next candle just trade in the opposite direction, which is the bearish candlestick open here and closes below. So it shows that sellers are more in control using the candlestick anatomy. Right, and what might likely happen, price might continue trading below. Right, but trust me, this candlestick forms everywhere on the price chart, but we look at specific zones where this candlestick form, and we use it as a yardstick to make price decision or enter the market. Right now, we also have the bullish engulfing candle. Now the bullish engulfing candle states that the first candle is a bearish candle that opens here and closes below, and the next candle does the opposite of what the previous candle did, which is going in the opposite direction and totally covering the previous candle, as you can see. Now this states that the psychology states that these buyers are, the momentum of buyers are much in the market, and price might likely continue going up. Now we also have the pin bar candles. Right now, the pin bar candles, we have the bullish pin bar candle, which is this, right, and we have the bearish pin bar candle. Now what the momentum or the psychology states behind this candle is simply that when the price candle or the candles open, it trades below, right, trade below, and at this point, for whatever reason, buyers start gaining momentum, pushing price, and it went and closed above the open price, giving buying momentum. So price might likely continue buying, right, from after the formation of this candle or after the form of this candle. And likewise the same for a bearish pin bar. It states that the price opened here, right, and traded above, and for whatever reason best known to the market, sellers got involved and start pushing price lower, and it closed overall up below the open price. And it states that sellers might likely continue pushing the price lower. And we also have the tweezer top and the tweezer bottom. Right now, this is the tweezer bottom. What the tweezer bottom states is that the previous candle is a selling candle, which signifies sellers pushing price lower, while the next candle does the opposite thing and push price back to the initial opening price, signifying buying momentum. Right, so from there, price might likely continue buying higher. Right, and likewise the same for tweezer top, right? This is a tweezer top, right? Which is the first candle is always a bullish candlestick that opens and trade above, right, and closes, while the next candlestick open and does the opposite thing, pushing back price back lower, signifying selling momentum, and price might likely continue selling from that point. Now we have for the fourth the inside bar candle, right? Now we have two type of inside bar, which is the bullish inside bar and the bearish inside bar candle, right? Now this is a bearish scenario of an inside bar candle. What the psychology or the anatomy of the formation of this candle entails is that first, buyers were in control, as you can see, pushing price higher, and suddenly you see a candle close either 50% of the previous candle, and this signifies that at this point sellers are in control, buyers have lost control over the market, and price might likely continue selling downward. And we have the bullish inside bar candle, right, which signifies that sellers opened and pushed price lower, right? Sellers were basically in control of the market, and the next candle then opened bullish and closed inside of the previous candle, right? Inside of the previous candle, which signifies that buyers have stepped in and might likely continue pushing price higher. Now this is the psychology behind this formation of these candles, but trust me, it's not all everywhere that this candle form that we traders look out for. You understand? We don't just trade anywhere that the candlestick form. This is where you now understand how to apply candlestick formation in zones like support zones and resistance zones. So now let's go to the chart and see how we can look at support, obvious support and resistance zone, and when price come back to the level, then using this candlestick formation, let's see how we can make decision trading off these candles, right? Now let's look at a support zone, right? Let's go to lower price data, right? An obvious price data. Okay, let's use the 4-hour time frame. Okay, now can we see we have an obvious support level here, right? We have an obvious support level here, right? We have an obvious support level here. Now what can we see? After price created this support level, traded up, and when price came back, can you see that the first touch we had a form of an engulfing, right? An engulfing candle. Let's zoom in closely so that you can see we have a form of an engulfing candlestick forming in our zone, right? So now what do we do if we enter at the form of this engulfing, putting our stop loss below the level? You can see we were in a very little drawdown, but if we were still holding the market, we would have hit our target, which is this previous high right here, right? Can you see the power of an engulfing candlestick, right? And let's look for more examples, right? Now if we're looking at this as our resistance level, right, can you see that when price tapped into our resistance level, you can see the formation of this candle, which is a tweezer top, right? As you can see here, we had a tweezer top formed here, which shows a bearish reversal candle. And if we entered just there, right there, right, if we entered there, putting our stop loss just above the level, targeting the downside, you can see that we would have closed with profit, right? And let's look at another support level, right? This is an obvious support level again, as we can see. Now this is more tricky because the price made what's it called, price consolidated before trading, right? But if you can see, we had more or less of multiple candles signifying buying momentum, right? The candles wasn't shaping. Now let's look at this resistance point. Now can you see that when price came back to this resistance point, can you see the formation of a pin bar candle there, a clear pin bar candle, a bearish pin bar candle? And that is our confirmation in trading off this resistance point, right? You see that we're using it only on resistance and support level, and if we held our trade looking at the market, you can see that we actually hit, price actually traded perfectly to our zone, right? Now let's look for more candlestick formation, right? Now we can clearly see, okay, this was more or less of a multiple. This is a support point, and the candlestick printed was not really clear, right? And likewise for here, this was a obvious resistance point, and the candlestick printed was not clear, right? So let's look for more clear example if we can get any. Let's go back to price data, right? So these are one of the ways you trade candlestick formations with support levels and resistance levels, right? So okay, not clear. Okay, let's use here as an example. We can see an obvious support level here, which we have 1 touch, 2 touch, 3 touch, 4 touch. So this is a major support zone, right? This is a major support zone. And when price came there, right, after forming 1, 2, you can see an engulfing candlestick again, right? Or rather a bullish pin bar candlestick formed here, right? This is a bullish pin bar candlestick that formed, right? A bullish pin bar candlestick that formed. And if we took our entry from there, if we took our buy entry from there, you can see how price, after the form of that candle, you can see how, putting our stop loss below the range, you can see how price moved up, right? So now this is simply how we look at candlestick formation, and we can tell this is a resistance point again. Now let's see, can you see a form of an inside bar? Right now, can you see a form of an inside bar here? We have a bullish candlestick, and you can see a bearish inside bar. So if you entered at the form of the inside bar, you can see stop loss were above the range, right? You can see that after price triggered you in, although market will not go in your direction at once, right? That's one thing you need to understand. But this is a clear confirmation for a selling candle, right? Or a sell is about to happen, right? And with this, you can see how we make trading based decision, trading with candlestick formation in support and resistance zone. And it can also be used in trading supply and demand zone, right? Regardless of whatever model you trade, but this is basically used for support and resistance zone. And if you found value from this video, kindly like, share, subscribe, and hit the notification bell to get notified whenever I drop trading educational content like this on my channel, right? And also in the description box below, you'll see the link to join my free Telegram channel, where I post trade signals and ideas, building the biggest trading community in Africa. And also, guys, please backtest all these patterns, right? Backtest. Remember, let's recap for the last time, right? Always remember that we have basically 3 major candlestick patterns, 4 major candlestick pattern I use, which is the engulfing candlestick, the inside, the pin bar candlestick, the tweezer candlestick, and the inside bar candlestick. These are the 4 candlestick I majorly use to make trading decision. And please, before you trade this on a live account, backtest it on a paper account. look at support levels and wait. When price get to that support levels, look out for these candlestick patterns, right, or resistance level. When price get to support and resistance levels on your price charts that you've mapped out, look out for these candlestick patterns there, and with this it will enhance your entry accuracy in the market. And yeah, I will see you in the next video. Peace out.